As Stan Druckenmiller has pointed out in the past, when you have a high dollar valuation, high oil prices, and high interest rates, that always leads to an earning recession for companies. This stuff is still coming.
You see Janet Yellen also saying that she doesn't believe a recession is imminent and no one needs to worry at the moment. What is the difference between your view of the world and their view of the world? Why do you think we're already in a recession?
I think the difference is I'm being honest, right? I'm being intellectually honest. I'm not managing the expectations of the country like those guys are. I think that's the primary job of the Federal Reserve, by the way, is to manage expectations of the markets. And because expectations are everything. And if you lose your perspective on something and if you go crazy, then that's when things plummet and get out of control. So I think they want to sort of maintain the concept that they actually do exert significant control over the markets. And in a way they do, but in a more powerful way they don't. The markets themselves are so much more powerful and so much larger than the Fed itself. But so what are they doing? I think they're being not totally honest. They're twisting the truth. They're focusing on things like, well, unemployment is still very low. That's true, but that's going to change probably pretty rapidly. Everything else you look at, whether it's consumer sentiment, whether it's housing rolling over, whether it's the stock market crashing, you can go on thing after thing. Manufacturing is way down. I mean, we're talking not just recessionary levels. Some things are at all-time historic lows right now. That is not good. The CEOs that were interviewed, this just study came out. I'm sure you talk about this too. 75% of CEOs think that we're either in a recession or we're going to be in a recession within the next 12 months. That's for real. That's no joke, right? And as Stan Druckenmiller has pointed out in the past, when you have a high dollar valuation, high oil prices, and high interest rates, that always leads to an earning recession for companies. This stuff is still coming. We haven't even hit this part yet. So we haven't hit the ugliest part of everything right now. The one thing that I'm watching, by the way, really closely is the price of oil. Oil has been kind of on a downtrend recently, and I think that it probably has peaked and it's rolling over. Similar to 2008, the stock market had started to decline, but the price of oil had continued to ramp up higher. Once you see that price of oil peak and then descend, it can descend extremely quickly. And what that does is the floor drops out of risk-on assets. Stocks, I think, risk-on assets in general are going to crash and probably crash hard and further than they have already. And then at that point, that's when we'll get the disinflation, right? The disinflation that Powell wants. He's gunning for demand destruction. He's succeeding. He's destroying demand. He's bringing down the wealth effect. He's making people poor. He's shutting down businesses. He's getting what he wants. And I think we should be careful about what we're wishing for, because we're going to get it and it's going to be ugly in the short term.